Welcome to Buy, Hold, Sell. This week an M&A special. I'm joined by Geoff Wilson and John Abernethy. We're looking at M&A deals, deal or no deal. Geoff, I'll start with you. Myers and DJ.
It should happen. To me, it makes sense to put the two together. Take out the overhead costs. You look at retailing in both Australia. You look at it in Sydney and Melbourne. It is an incredibly difficult business. Department store retailing. So if you can get any economies, I think it makes sense to put the two together.
So a deal.
Deal.
John, what about you? Deal or no deal on Myer and DJs?
There's some logic to it. It's a difficult deal. I'm not quite sure why Myer's pushing it. I think it should be David Jones having the upper hand. But I'd suggest if Myer is serious, they should step into the market and buy 20% of David Jones and actually force the deal through. But having discussions is going to go nowhere. So I'm sceptical. It might be logical, but I'm sceptical. No deal.
No deal. Alrighty. This one came out just recently. A few analysts saying that the media space is due for some consolidation. Yeah. Seven and Fairfax. Deal or no deal?
Well, it could be a deal. I think it's a bit like 1 + 1 = 1.5. So these sort of deals in the media landscape are great for investment banks. It might keep a few people their jobs, but in terms of shareholder value, I don't think it's going to add any. And I probably suspect Kerry Stokes is not someone who's going to take a good business and buy a bad business and merge it with it. So I'd say no deal. No deal.
What about you, Geoff?
I can understand the logic about Kerry Stokes wanting to get control of Fairfax. They've got some really some good assets. But I'm with John. I actually don't think it'll happen. I'm on no deal. No deal.
Bank of Queensland. Are the big four underexposed in Queensland, and could it become a regional target?
To me, I think the problem with Bank of Queensland is just their business is structurally different to the big four. How they've got the franchise model. So I think there's no deal. No deal
on Bank of Queensland. What about you, John?
No hope from the big banks. There should be a second line bank merger, so I think I'd be looking at places like Bendigo before I look at one of the major banks. The major banks have got great franchises already. I don't believe they're underrepresented in Queensland, and anyway, with mortgage broking, you can get distribution pretty quickly without buying it. So no way. No deal.
A very small one on the house. Is it something that could get digested by REA Group?
Well, it could. I mean, I look at internet companies, and once they get to a certain size and they have a certain market presence, then it's all about maintaining it. And so all these little competitors come up and they get bought off. And that's the trick now, is to create small companies which can disturb the incumbents and get bought out. So that I'd put that as better than even money chance.
Okay, could be a deal. Geoff, what about you?
Yeah, I'm on no deal. Yeah, to me, on the house, I actually don't think it's a great business, and I don't think it makes sense for REA to take it over. They're better off looking internationally and continue to expand internationally.
Okay, no deal. Geoff, is the one that does make sense for you?
Which one?
Is the one in the market that makes sense?
Takeovers? Yeah, they should take over John's business. Climate Investment Management, CIW. We're a big shareholder. I think it's incredibly cheap.
Does that make sense to you, John?
No, I think Geoff's talking his own book. But look, I do believe that when some of these retailers like a Reject Shop fall to ridiculous levels, you've got a massive amount of private equity looking for an investment home. And I'd actually put Reject Shop into the takeover target at under $9. I think that's looking very cheap for a private equity buyout.
Okay, it's murky waters in M&A land.